All right, today we are tearing down an investment manifesto that makes a pretty radical claim. It says the next $1 trillion of wealth isn't coming from Wall Street or Silicon Valley. Nope, it's coming from a completely different economic frontier. So let's get into it and break down their argument.
Okay, first things first, you gotta understand this isn't some dry research paper. It's a manifesto, through and through. It's laser focused on the people who control the real money. We're talking institutional desks, family offices, the serious investors. Its one and only goal, to convince them to move their capital.
And boom, it kicks off with this massive claim. The core idea here is that the old playgrounds, the traditional markets in the West, they're tapped out. The real growth, what they call alpha, isn't there anymore. They argue the real financial energy, the actual velocity of capital, has already moved on.
So, where is this trillion-dollar opportunity then? Well, the manifesto points straight at frontier economies, specifically the US-Africa corridor. But, and this is a big but, it claims you can't get to this value using the old financial playbook. It says you need a whole new set of tools built for this new world.
So to build their case, they start by going on the attack. They pick a target they see as the weakest link for investors in these emerging markets: stablecoins. Their whole argument is that the safety you think you have with stablecoins, it's all just a dangerous illusion. And this quote right here, this is the heart of their critique. The author, Don Lyon, is basically saying that when you're holding a stablecoin pegged to something like the US dollar, you're not actually safe. You're just importing all of the dollar's inflation. In a fast-growing economy, a zero-yield asset isn't a safe piggy bank. It's a leaky bucket that's actually losing you ground. And I love this slide because it lays out their central ideas so clearly. On one side, you've got dead capital. Think stablecoins, fiat money, stuff that just sits there, slowly getting eaten away by inflation. But on the other side, you have living capital. These are assets that are actually working, that are productive and tied into the real, growing economy. All right, so if stablecoins are the dead capital, what's the alternative? What's this living capital they're talking about? The manifesto's answer is a big shift into something it calls real-world asset tokenization, or RWATs. This is their big solution. So, what in the world is an RWAT? Well, think of it like this. You take a real-world asset. It could be a building, a fleet of trucks, maybe even agricultural products, and you create a digital token that represents ownership of that thing. The whole game here is to turn something you can't easily sell, something illiquid, into something you can trade in an instant. And here's how it works, broken down into 4 simple steps. You start with a real asset, right? Like a shipping container. Then you tokenize it, basically creating a digital receipt for it on the blockchain. The idea is that this instantly unlocks the value that was trapped inside it and turns it into a liquid asset that anyone, anywhere in the world can trade. No more traditional financial middlemen. But just tokenizing stuff isn't enough. The manifesto then introduces the engine that's supposed to power this whole system. They call it the yield and the burn. It's this 2-part machine designed to create both growth and, interestingly, scarcity.
So the first part is the yield engine. And we're not talking about some risky pie-in-the-sky bets here. The fun behind this, Vector Capital, focuses on something called venture debt. It gives loans to already established cash flow positive businesses in places like Nigeria. This creates a real, predictable, and high-yield stream of income from the actual economy.
Then you've got the second part, the scarcity engine. The system has its own token, called Alcoin. And here's the kicker, all the transaction fees and profits from those real-world business activities are used to buy Alcoin off the market. And then they literally vaporize it. The supply is engineered to get smaller and smaller as the whole ecosystem gets bigger. And this slide right here, this is where the rubber meets the road. On one side, you have the good old inflationary model, where more money can always be printed and its value can go down over time. But on the other, you've got this proposed deflationary model, where growth on the platform means a shrinking supply of the token. The manifesto claims this is a mathematical setup that forces the value to go up. Okay, so we've got the mechanics down, but this manifesto goes deeper. It introduces this whole philosophical idea to describe its growth strategy. This isn't just about spreadsheets and numbers. It's about building a very specific story for how this thing is designed to grow. It uses this idea of sacred geometry, and specifically the Fibonacci sequence, as a kind of metaphor for its growth plan. The goal here is to frame the expansion not as some chaotic, speculative bubble, but as a natural, organic process, kind of like the growth patterns you see in nature itself. You've probably seen this sequence before, right? Where each number is just the sum of the two that came before it. Well, the manifesto uses this familiar pattern as a really powerful storytelling tool. It's a way of signaling to investors that, hey, this growth is meant to be compounding and sustainable, not just some flash in the pan. So you have to ask yourself, is this whole sacred geometry thing just a slick marketing story? And you know what? The manifesto basically says, yeah, it is. And that's the whole point. The story is precision engineered to pull in very specific kinds of investors. And check this out. This slide is basically them showing their cards. It's their investor heat map. Just look at how the hook is different for each group. For diaspora investors, it's all about making an impact back home. For family offices, it's the lure of high-yield assets that aren't tied to the stock market. For VCs, it's all about the tech. It's a custom story for every single person they're trying to attract. All right, so let's bring this all home. The manifesto wraps everything up by condensing its entire pitch into 3 core pillars. These are designed to be the foundation for investor confidence. And here they are, the 3 big pillars they're building this whole thing on. First, the yield, which is grounded in real-world venture debt. Second, the scarcity, which is driven by that deflationary token burn. And third, the scalability, which is framed by that story of organic, geometric growth. That's the full package they're presenting. And they leave you with this, a really powerful, urgent call to action. It's a final, ambitious statement that just perfectly captures the tone of the entire manifesto. And it leaves investors with one massive question. Is this the actual future of finance? Or is it just a really, really good story?